again, so I'm going to ask everybody to bring the screens back.
There's a couple, I guess, that tie in together. Someone had asked about should they wait until after the budget to invest into a VCT, and obviously we can't give advice on this, but I'd be interested to hear views. But then also, do you believe that the UK government policy is helpful or a hindrance to EIS and VCT investments?
Happy to take that as a first point. And yeah, so I sit on the board of the ISA, and there is a progressive expansion actually of the EIS and VCT kind of remit, with the sunset clause being extended and KI being introduced. So all the feelings we hear from the government is positive on EIS VCT, which is at quite a counterpoint in some ways to pension and IHT, which is quite interesting and kind of refers to my point about investing into UK SMEs, which is great. I don't think there's going to be any changes in the budget for what we're doing, but you never know.
I'd agree. I think the budget is unlikely to change anything directly for EIS and VCTs. The policy question is a more interesting one. Yes, the government does seem to be very positive towards both EIS and VCT. But if you take the question more broadly, there is clearly more they could do for our business in the UK in general. And certainly we find some of our companies are starting to find it easier to generate revenue overseas, more so than in the UK. Not all of them.
I don't think there's anything that we can sort of echo more, but yeah, I think UK PLC, cannot dig itself out of the financial hole that's created without new businesses, being invested into. So I think it's, unlikely to change. I think it's going to be here to stay for a long time.
AI has come up a couple of times in the presentations. People are looking ahead, and obviously we've got the budget ahead, potential headwinds, although we seem to be agreed here that probably won't be any changes that directly or hugely impact VCT and EIS. AI bubble has been talked about a lot. Has it burst? Is it going to burst? What's the feelings here and valuations around AI in general?
Well, every company wants to call itself AI these days, doesn't it? And what do you actually mean by AI? I did a PhD in AI. It was computer vision, 30 years ago. It's very different to what has then, been in some of the companies we've invested in, which are, much more the sort of conventional machine learning, to the generative AI you're seeing with LLMs now. VCTs, I don't think, are going to be playing in the big league of the particularly the US, AI companies. But we still see, considerable value in specific cases for AI where it's appropriate.
Yeah, just to sort of build off the back of that, I think AI enabled businesses rather than AI itself. VCTs just don't have the financial firepower, even if we all pooled all of our resources to get anywhere near what's going in from the US. So AI is the sort of macro, will ebb and flow. I think AI enabled businesses or businesses that are looking to use AI to sort of improve existing industries and efficiencies. I think that's an opportunity that will still maintain, even though there'll be some sort of fluctuations within the sort of big six, big seven, companies that are driving the markets. So, we're looking to sort of invest into companies that are effectively selling the shovels for the gold rush rather than the gold rush itself.
I suppose thinking about that question from an investor's perspective, I suppose the worry is, and there's been an awful lot written about the bubble, and I have no idea whether it's popped or is going to pop. But the worry is that the sort of concentration of listed assets in a relatively small number of very large businesses. And I do think that does play into this world. So, one of the features outside of tax reliefs of VCTs is accessing a different asset class. So I think, that's certainly where, VCT, if there's a bubble that bursts, it's going to impact absolutely everything. But I think, as Brian, you alluded to at the start, having a small proportion of your overall wealth in venture, unquoted, etc., I think can only help in terms of diversification.
I think more broadly, AI, the Mag 7, etc., they are creating efficiencies and revenue as well. So it's not a bubble without reason, and there are some very high valuations. The multiples are very high, and also the secular investments are Yeah, a bit dubious, but I don't personally. I don't think it's going to be a big crash. I think there'll probably be a flattening for a while. And you've seen actually, it's very pleasing to see the FTSE 100 thrashing the S&P for the last year, and long may it continue. Obviously, not all the FTSE 100 is representing UK PLC, but it's nice to be UK focused for once rather than S&P. But I think that there's a lot to go for across the UK in technology, and as we were saying about, there's a good diversifier away from those listed equities, which are quite volatile. Despite EIS VCT being high risk, you could easily lose 20-30% of your money on the S&P in the next 6 months.
Final question that's come in: what are expectations for an increase of tax on dividends and therefore impact on VCT returns?
I think that no one else seems to want to, don't want to hear my own voice at the time, but yeah, increasing dividends, income tax, whatever, that I think it's very unlikely to affect VCTs, and hence that's good for the industry, and it's probably not good for any of our personal finances, but it'll be good for the industry, and hopefully, again, as I said before, if people can be encouraged to invest into VCT and EIS and hence support UK SMEs, that's got to be a good thing.
Yeah, I'd echo that. I read a stat the other day that, fiscal drag, which is the stealth tax that people are not, fully aware of, is going to drag sort of in excess of 11 million people into the higher rate tax bracket. That's almost a third of the workforce. So there is an increasingly more mainstream conversation for advisors to have with their clients around this. This is not just an asset class for the sort of super wealthy as it once was. This is becoming more core mainstream financial planning, and Brian sort of mentioned it right at the start with, you can actually get some alpha out of your investment portfolio within VCTs and EIS as well as getting the tax breaks. So I think that's the message that I probably would take away if I were advisors. It's not just a narrow group that's being affected by this, it's affecting a much, much larger pool. And if it's not in your toolkit, you're at risk.
Thank you very much, everybody. And we'll see you next time.